Palantir made early investors over 340% gains in just 1 year. But here's what Wall Street doesn't want you to know. There are 5 AI companies trading under $5 right now that could deliver even bigger returns. I'm talking about real companies with actual revenue, government contracts, and partnerships with giants like Mercedes-Benz, the U.S. Air Force, and Panera Bread. While everyone's chasing expensive AI stocks, smart money is quietly accumulating these hidden gems. One of them just secured a $165 million military contract. Another is automating thousands of restaurant kitchens across America. And the best part? You can buy all 5 for less than the price of a single share Palantir. In the next 8 minutes, I'm revealing exactly which stocks these are, why they're positioned to explode, and how you can get in before the rest of the market. Catches on. Let's get started. Hey everyone. Palantir has been the talk of the AI world, surging over 340% in the past year. But at over $80 per share, many investors are priced out. The good news? There are hidden gems in the AI space trading under $5 that have similar growth potential. Today, I'm breaking down 5 AI stocks under $5 that could be the next big winners. These aren't penny stock gambles. These are real companies with actual AI technology, revenue, and massive growth potential. Let's dive in. Stock number 1. Big Bet AI, BBAI. Big Bet.ai is literally called a small-cap Palantir for a reason. They provide AI-powered decision intelligence to government and commercial clients, just like Palantir does. Big Bet focuses on supply chain optimization, logistics, and autonomous systems using AI. Their main clients include the U.S. military, defense contractors, and Fortune 500 companies. What makes this compelling is that their revenue grew 24% year-over-year in 2024, and they recently secured a $165 million contract with the U.S. Air Force. They are partnered with major defense companies like Raytheon and are trading at just a fraction of Palantir's valuation despite having similar government contracts. With increased defense spending and AI adoption in military applications, Big Bet is positioned to capture significant market share. Their Q4 2024 earnings showed accelerating bookings, indicating strong future revenue. However, the risk factor here is that they are still working toward consistent profitability, and cash flow remains negative, so they need to scale quickly to justify investor confidence. Stock number 2. SoundHound AI, Sound. While Palantir dominates data analytics, SoundHound is dominating conversational AI. Think of them as a voice interface layer for the AI revolution. SoundHound creates voice AI technology for cars, restaurants, smart devices, and customer service. Their technology powers voice assistants in millions of vehicles and drive-through restaurants. They have impressive partnerships with Stellantis, Hyundai, Mercedes-Benz, and NVIDIA. What's really exciting is that their revenue jumped 89% year-over-year in Q3 2024, and they acquired SYNQ3 and Amelia AI, expanding their enterprise capabilities. Their backlog of business is growing exponentially with over $661 million in contracted revenue. Conversational AI is projected to be a $50 billion market by 2030, and SoundHound is one of the few pure-play stocks in this space. As generative AI gets embedded in everyday devices, SoundHound voice technology becomes essential infrastructure. Their restaurant AI division is particularly explosive right now. Chains like White Castle and Jerseymites are using their drive-through AI, and with labor costs rising, every fast food chain will eventually need this technology. The main risk is high competition from tech giants like Google and Amazon. However, SoundHound's specialized focus gives them an edge in B2B applications where customization and integration matter more than brand recognition. Stock number 3. Indie Semiconductor. Indie. If you believe autonomous vehicles and AI-powered cars are the future, Indie Semiconductor is your under-$5 ticket to that revolution. Indie creates the chips and sensors that power advanced driver assistance systems, user experience features, and connected car technology. They're essentially building the brains for smart vehicles. What makes this stock particularly undervalued is that they have design wins with BMW, General Motors, Ford, and major Tier 1 auto suppliers. Their revenue is expected to hit $500 million by 2025, with gross margins improving to over 50% as they scale production. They are trading at a massive discount compared to competitors like Mobileye. Every car needs AI chips for safety features like lane departure, collision avoidance, and parking assistance, and Indy's chips process this data in real time. As regulations mandate more safety features globally, demand will explode. Indy has a $3.2 billion design win pipeline through 2030, which means these are locked-in contracts that will convert to revenue as vehicles go into production. The risk factor is that auto industry slowdowns can impact revenue timing. However, the long-term trend toward autonomous and electric vehicles is unstoppable, making this a solid long-term play. Stock number 4, Miso Robotics. Miso, labor shortages meet AI robotics with Miso Robotics, which is automating commercial kitchens with AI-powered robots. Their flagship product, Flippy, is an AI robotic arm that cooks food in restaurant kitchens. It can fry, grill, and prepare food with perfect consistency every single time. Their second product, CookRight, uses AI cameras to monitor food quality and ensure everything meets standards. They are already deployed in chains like White Castle, Caliburger, and major sports stadiums across the country. What makes this explosive is that they are solving a real problem where restaurant labor costs are at all-time highs. Their robots pay for themselves in under 2 years through labor savings alone, not even counting the improved consistency and speed. The total addressable market is massive, with 660,000 restaurants in the U.S. alone. Fast food margins are razor-thin, and labor is the biggest expense. Miso's robots reduce labor costs by 30 to 40% while increasing consistency and speed. As minimum wages continue to rise, adoption will accelerate dramatically. Miso recently announced partnerships with Panera Bread and expansion into international markets, and they are also moving into beverage automation with DrinkBot. The risk here is that this is a speculative play since Miso is in the pre-revenue scaling phase and burning cash. However, the potential is absolutely massive if adoption takes off the way early indicators suggest. Stock number 5, C3.ai, AI. C3.ai is one of the most established names in enterprise AI, and they are currently trading near 52-week lows, which presents a potential opportunity for smart investors. C3.ai builds AI applications for large enterprises across multiple industries, including energy, manufacturing, financial services, defense, and healthcare. Their platform helps companies build, deploy, and operate AI applications at scale, which is incredibly complex and valuable. They have partnerships with Google Cloud, Microsoft Azure, and AWS, and their customer base includes major names like Shell, 3M, the U.S. Air Force, and major utilities. Their subscription revenue model provides recurring, predictable income streams. This is really a turnaround story that's gaining momentum. C3.ai faced criticism for slow growth in previous years, but things are changing rapidly. Q2 2025 showed 29% revenue growth and expanding partnerships across industries. Their generative AI offerings are gaining serious traction as enterprises realize they can't build this capability in-house. What gives C3.ai a moat is that they have years of AI experience and deep industry expertise that takes competitors years to develop. Building enterprise AI is extremely complex with regulatory requirements, data security, and industry-specific needs. They've already solved problems that competitors are just starting to face. The risk is competition from hyperscalers like Google, Microsoft, and Amazon who can bundle AI into existing cloud services. However, C3.ai's industry-specific solutions provide differentiation that generic cloud AI can't match. Before you do anything, let me be absolutely clear about something very important. This entire video is strictly for educational and informational purposes only. I am not a licensed financial advisor, broker, or investment professional. Nothing I've shared here should be considered as financial advice, investment recommendations, or solicitation to buy or sell any securities. Every single piece of information I've discussed today comes from publicly available sources, including official company websites, SEC filings, press releases, investor presentations, and quarterly earnings reports. Stock prices fluctuate, and past performance never guarantees future results. These are high-risk investments, and you could lose your entire investment.